Welcome, everyone, to Stock Talk. If you enjoy digging into market opportunities and really understanding investment ideas, please do hit that subscribe button now. Today, we're doing a deep dive, sourcing our analysis from stocktelescope.com and The Focus, a company called Progress Software Corporation, tickers NASDAQ, PRGS.
Okay, but before we jump in, just the usual but very important disclaimer. This discussion, like everything here on Stock Talk, it's purely for informational purposes. It's definitely not investment advice. You should always do your own research, your own due diligence, and talk to licensed financial advisors before making any investment choices.
Yeah.
And remember, past performance doesn't predict future results, and yeah, all investments carry risk. You could lose money.
Got it. Okay, so let's unpack Progress Software. The core idea here, the investment thesis from Stock Telescope, seems to be about an AI-powered growth transformation. And tied into that, a really compelling SaaS transformation story. What makes it compelling right now?
Well, I think the why is really interesting here. It's trading at what looks like a pretty reasonable valuation, about 11.66 times forward PE. Now, compare that to a lot of its SaaS peers. They often trade much higher, maybe 20, even 30 times earnings multiples. So PRGS looks kind of inexpensive, especially given the strong growth momentum they're actually showing. Suggests the market might be missing something.
Okay, and a huge piece of this transformation seems to be the ShareFile acquisition, right? That was, what, $875 million? That seems like it really kicked their SaaS evolution into high gear, took SaaS revenue from maybe 3% up to nearly 30% of total. That's a big shift.
A massive shift. And the integration apparently is running ahead of schedule. That's always good news. Plus, it's boosting profitability. We're talking gross margins over 80%. That's really strong for software. And importantly, it plugs them into this huge market, over $8 billion, for document management and collaboration. Think about how much businesses rely on that stuff.
Right, managing all those digital documents. Okay, so how does AI fit into this picture alongside ShareFile?
Yeah, the AI investments, they're being quite strategic here. They acquired Nuclea. That acquisition gives them leadership in something called Agentic Retrieval Augmented Generation, or RAG AI. It's pretty cutting-edge stuff. Basically, it helps AI deliver more accurate, context-aware answers by pulling info efficiently from large data sets.
Okay, so not just buzzword AI.
No, exactly.
Wow.
It's practical AI integrated right into their products, like ShareFile AI for intelligent document stuff. Sitefinity AI helps with content optimization. Chef Intelligence is for IT automation, which is huge for complex environments. And OpenEdge AI for building business apps. They're really focusing on, solving actual enterprise problems.
Makes sense. So with all this strategy, the SaaS shift, the AI integration, well, how are the financials looking? What did Q2 2025 tell us?
Q2 looked pretty good. The stock's around $63.84 currently, and Stock Telescope sees a target of $85 to $95 over the next, say, 12 to 18 months.
And the growth numbers?
Very strong. Annualized recurring revenue, AR, was up 46% year over year. That hit $838 million.
Wow, 46% ARR growth.
Yeah, and overall revenue grew 36% year over year to $237 million. So really solid top-line momentum.
And what about profitability? You mentioned margins earlier.
Right. They're hitting what they call best-in-class 40% non-GAAP operating margins. So you've got this combination, strong revenue growth and expanding margins. That's the kind of story that can lead to what the market calls a multiple re-rating, basically. The stock's valuation increasing because the underlying business is performing so well.
And they're managing their capital well, too.
Seems like it. Disciplined approach. They paid down about $70 million in debt in the first half of 2025, and they also bought back $67 million worth of their own shares. So returning value while strengthening the balance sheet.
Okay, so pulling it all together, the recommendation from stocktelescope.com is a strong buy. Basically, attractive valuation, clear growth catalysts from SaaS and AI.
Yep, that sums up their view pretty well.
So to recap for our listeners, Progress Software looks like an interesting play at this intersection of AI, SaaS transformation, and maybe even some enterprise software consolidation.
Absolutely. And maybe a final thought to leave you with. Consider this. Progress has been around for 41 years. They have a really sticky customer base, shown by that 100% plus net retention rate. So the question is, how might integrating all this cutting-edge AI truly solidify their position, make them even more mission critical for how enterprises work, for the next generation?
That's a great question to ponder.
Yeah.
Definitely something to think about. All right, that's all the time we have for this Stock Talk Deep Dive. Huge thanks for tuning in. We hope you found these insights drawn from stocktelescope.com's analysis valuable. And just one last reminder, this is all for informational purposes, not investment advice. Do your own homework. Catch you on the next one.